Welcome to the Plan Solutions Incorporated podcast, where we give facts and insight on the latest happenings in the world of economics, financial markets, and personal finance. Plan Solutions provides advice on a variety of financial topics, including investment management, tax preparation and planning, and retirement planning. Chase has 25 years of experience in the financial industry, holds a certified financial planner and chartered financial analyst designations, and has earned a master's degree in taxation and a doctorate in business administration. Chase has a passion for helping clients down the path toward their financial goals. And I'm Jason LaChance. And on this episode, we're going to discuss the IRS Dirty Dozen. Inflation ticks up in June, SALT deduction for 2025, and a look at the Plan Solutions Incorporated Office Bulletin Board. Mr. Armour, how are we, good sir?
Well, I don't know. We were just talking. We must be getting old. All the icons from our childhood passing away, with Hulk Hogan passing away today. You know, it's a lot of Hulkamaniacs out there with a broken heart, I think.
Yeah. I remember being a kid and cutting my shirt so I could rip it off, and my mom going, "What the heck are you doing?" That Ozzy Osbourne and yeah. But hey, we've got some great topics that we are going to dig into here. So let's dive in. The IRS Dirty Dozen. Every year, the IRS releases a list of a dozen tax scams to watch out for, known as the IRS Dirty Dozen. We talk a lot about fraudulent things here on the Plan Solutions Incorporated podcast. Want to keep people appraised, but appreciative that the IRS does it because scammers are always finding new methods. As a matter of fact, 2 minutes before we hit record, a scam call from a number that used to show up as a familiar number. So they're finding new ways.
Yeah, and that's really where most of the IRS Dirty Dozen are coming from. In the past, it used to be different. Kind of promotion scams or things that maybe professionals were selling, like tax havens and things that weren't legal. But now, I mean, what really dominates it is mostly different forms of fraud or misinformation. And so even though they put out Dirty Dozen, I mean, we can really kind of take them and just, categorize them into two separate categories.
Okay.
The first is, includes everything from phishing, smishing, spearhead, like all these, online or over the telephone type scams, like you were mentioning, where basically, someone's trying to replicate or pretend that they're a part of a legitimate organization, whether that's the IRS, state tax agencies, tax software companies, charitable organizations, third parties that offer IRS support, right? Anything related to the tax system, where basically it's just, some type of deceptive form of communication where they're trying to lure unsuspecting victims into providing their personal or financial information that can be used for identity theft purposes. And I think the IRS knows that, there's a certain level of intimidation that a lot of people feel, when dealing with a government agency, but a government enforcement agency, but the IRS in particular. And so, criminals are either kind of trying to, work off of that fear, or, maybe that, people think if it's a trusted organization and they may be more likely to, to give up information that really they shouldn't be.
Yeah, I think this last year I received several of those calls with the automated voice message of, we're here to alleviate your tax problems. And I don't know, I kind of paid in full, so I wasn't aware of what my problems were. But I can see how when that comes up, that it spikes somebody's worry and concern and like, oh my goodness, I have a tax problem. I wasn't aware. And, they make that return call in a state of panic.
Yeah, and that's usually what the fraudsters are trying to do, is create that emotional reaction where people will, react quickly and maybe, make decisions or take actions that they wouldn't normally do, right? I mean, the first step is always just to kind of take a step back, pause, analyze the situation, and usually it'd be pretty clear, okay, something weird is going on here. I'm not going to return this call, or I'm not going to click on a email link or something like that. I'm going to call my tax person, or if self-prepared, then call the tax agency using a separate number that is the accurate number for that agency, and then get to the bottom of it that way. And a lot of times, what you'll find is, if there is a legitimate issue, great, then you'll get some information and be able to put together a plan to address it. But more often than not, it just, there is no issue, right? There is no problem. They'll say, yeah, no, there's no tax problem here. There's no enforcement issue. There's nothing you need to do.
Yeah, one of the ones that I saw via email, and we've touched on this before, is if these entities, the IRS, for example, does have an issue, they wouldn't ask for personal information that they already have. And I've had several of those where it's like, just send us your social security number, we'll get this resolved for you, or your bank account and routing number, things of that nature. I mean, they get pretty clever because even the email addresses they'll use, that if you hover over it, for instance, with Gmail, you can click on it and see, and it will be similar, but there's enough cues within the email address to make it clear that it is a fraudulent email, and obviously the things they're asking is completely unnecessary.
Yeah, yeah. If you look very closely, right? Yeah, and generally the way that the tax authorities, interact with the public is through mailings. They send out mailings and they expect you to call them back. And you're less likely to get fraud in that area because doing mass mailings to, try to trick someone into revealing information is expensive by the time you figure in the paper and postage and everything else. Whereas, phone or email is very inexpensive. And so you can reach out to a lot of people if you're, attempting to steal people's identity. You can reach out to a lot of people knowing that maybe you only get a very small percentage, but you'll have some success rate that where maybe you can scam them out of enough money to cover the costs. Whereas with mailing, that's more difficult. So you want to pay more attention to the mailings. Still, be careful and confirm that they're legitimate. But phone calls and emails and internet searches, things like that, much less likely that that's the way the IRS would be reaching out.
Yeah, another area that you discuss here in the personal financial review that we've touched on before in a different topic is how social media continues to provide incorrect tax advice. I mean, there's just been so many examples of it.
Yeah, in today's world where so many people are competing for clicks, right, and trying to gain followers and make a living as a social media influencer, people trying every topic, and tax advice is one of them. And the unfortunate truth of the matter is, if you and I tried to set up our own social media website and give accurate tax advice, we would get no followers because it would
Right.
be extremely boring, right? Most people are not real interested in just the straightforward rules and strategies of our tax system. So what happens is these influencers or wannabe influencers, they make very exaggerated or false claims about new tax provisions or secret ways to take advantage of the tax code. And the truth is, these are just not accurate, right? They fall into the category of too good to be true. But because they are so extreme or different than the norm, that's what captures people's attention, and so it works. So a lot of people will follow these influencers and think that, oh, this is a way to take advantage of the tax system, and unfortunately it's not. People need to be very careful because the truth is, if you put something on a tax return and you sign it, you can't point to a social media influencer and say, oh, it's their fault. They need to pay the fines and penalties and interest and everything else. You sign that return, you're going to be responsible for it.
Well, if highlighting that, let's talk about best practices and defense against these things. I mean, obviously, working with a knowledgeable individual to help you prepare your taxes. What are some other ways that people can defend themselves against this kind of fraud?
Yeah, I mean, having a knowledgeable and reputable tax professional is probably the easiest, right? Because when these things come up, you know exactly who to call, right? You know their number. You can ask questions. Is this legitimate? Is this not legitimate? You know, do I need to respond to this notice? And you can go through and you know there's certain ways to know if you're working with a reputable tax preparer, right? And that's just you know look out for some warning signs about their services. If they're offering fees based on the amount of tax refund claimed, right, then that gives them incentive to maybe do things that are, you know, less than legal to get that tax refund higher so they can make a larger fee. You know, there's been lots of cases where they refuse to sign the tax return as the preparer, even though they prepared the return. That's a big red flag. Basically, you know, they're not standing behind their work and they don't want to be listed because they know there's a good chance that those returns will be flagged. Um, or if they refuse to, you know, use their IRS taxpayer a prepared tax identification number, or what's called the P10 on the return. Because one, maybe that means that they're not actually licensed, or you know, they don't want the IRS to be able to cross-reference their work if they see a pattern. It also means you don't have a way to necessarily look them up and make sure that their registration is current, that they haven't been barred or censured for, you know, some past you know, bad activity. And then the other is, you know, just be leery of taking tax advice from people with little education about taxes, right? Just someone who's a self-professed, you know, expert, you know, doesn't mean they actually know what they're talking about. Or, you know, the number of followers on a social media site does not mean that the advice is going to be accurate. You should look at things like certifications, degrees, professional designations, that type of thing that shows that, you know, they've shown a minimum level of competency when it comes to taxes.
Yeah. And finally, to bring it home, what if we experience a scam, not necessarily fall for the scam? Is there ways of reporting this to the IRS?
Yeah, so the IRS has Form 14242, where it's a report suspected abusive tax promotions or preparers, right? So if people, you know, think that something doesn't seem right, they can, you know, fill out that form online, by mail, fax it. Some people still have fax machines into the IRS, which is good because, you know, then it makes the IRS aware of the issue, right? Maybe you because you learned some of these tips, you were able to avoid having any issues yourself. But if you make the IRS aware, that could help other people from becoming victims.
Absolutely. Anything else you'd like to add before we move to our next topic?
You know, just the importance of being super vigilant, right? And like I said, I think the biggest key is when you get something, or you know that invokes that emotional reaction, just set it aside, take a deep breath. You know, nothing's going to happen in the next hour, and then really think it through, and then think, okay, you know, I think that just slowing down and giving your rational brain a little bit of time to think, you know, is really people's biggest defense against falling for one of these scams.
Absolutely. All right. Inflation ticks up in June. Let's dive into it. The Consumer Price Index, CPI, a common measure of consumer price inflation, which we discuss here frequently on the podcast, increased by 0.3% from May to June, causing the annual inflation rate to increase from 2.4% in May to 2.7% in June. Let's get into the nuts and bolts of it. What areas are we seeing inflation tick up?
Yeah, so we've seen a little bit of a move up in inflation, but this is coming after several months of inflation continuing to come down, right? And it's pretty common that even in a downward trend or a low inflation environment, you'll have from month to month things will vary, but still inflation below 3%, which you know is a big you know a big kind of high watermark that we want to stay below. But I think this report is interesting because it was really anticipated that we'd see a bigger increase in inflation from tariffs that have been put into place. And the idea that, you know, tariffs are a tax on imported goods that'll get passed on to consumers, and we'll see that prices move up. But that doesn't really seem to be the case. I mean, it's hard to, you know, dig into the data and go line by line as to, you know, where tariffs have been applied and where they haven't. But if you take one of the major categories, which is commodities less food and energy, so that is a category that covers everything from apparel to automobiles, right? So it's very broad, basically, you know, capturing most of the stuff.
Right.
that we buy, except for, as it says, food and energy. So that increased 0.4% for the month. So that was a little bit higher than what we've seen, but it's only up 0.7% year over year. So less than 1% year over year increase. That category only represents about 19% of household spending. So really, the impact that it had on the overall 2.7% inflation rate was only 0.1%.
It's interesting how we kind of have a lot of speculation around these things, and then when it comes to fruition, it's not what we think. So, what is the large factor when it came to this tick up of 0.3% of inflation from May to June?
Yeah, a big part of it is the same theme that we've been seeing for quite a while, which is shelter prices, right? The
Mm.
cost of housing. It increased 0.2% for the month, but more importantly, it was up 3.8% year over year, so above that 3% mark. And since housing represents 35% of household spending, it has a big impact. I mean, basically, of the total inflation rate, half of it was attributable to shelter because of that higher inflation. But there's a couple other areas of interest. Food prices, right? That's something that seems like is a constant discussion topic. That increased 0.3% for the month, and we're up 3% year over year. So not huge, not the high inflation we saw several years ago. But that category added 0.4% to the overall inflation rate. So, kind of moderate impact. And then the other one that people often talk about is energy prices. Those were up 1.5% for the month, which is a big move for a single month. But food and energy tend to be the very volatile categories,
Right.
right? So it's not uncommon to have a year where energy is, or a month where energy is largely negative and then, bounces back. Um, but if you look at energy prices as a whole, they're still down almost 1% year over year. So they're actually have been deflationary. But of course, that's why they typically pull food and energy prices out when they're looking at the core inflation, just because they tend to be so much more volatile than other prices, and from month to month may not necessarily be an indication of the overall trend.
Well, it seems to me, from past conversations we've had here, that that's why they tend to get that focus is because of that volatility. Am I correct on that? That people. I mean, I don't hear as often from individuals. Oh, my rent or my mortgage is up, but I'll hear, boy, my grocery cost of groceries and gas and energy bill are up. There's just a lot more conversation that seems to occur around those areas.
Exactly, because they can have short-term spikes, but also short-term periods where they drop quite a bit.
Mm.
That kind of averages out. So people typically look at the core, excluding those items, because that gives you more a better idea of the overall trend. It's a bit more slow and steady in terms of the changes that we see. And then, there's also the added aspect of, we also look at wholesale prices. So not in consumer prices, but, what businesses are paying. And wholesale prices were flat for the month.
Hmm.
So again, we're not really seeing this build and inflationary trend pushing its way through. We're more seeing that housing inflation continues to be higher than average, and in any given month, food or energy may be kind of adding or subtracting from that core trend rate, which can cause the inflation rate to go up a couple tenths in one month or down a couple in another. But we're not really seeing a build of inflationary pressures as some predicted.
Hmm. Anything else you want to add before we jump to salt deduction for 2025?
Well, just this is an area that we're going to continue to need to watch, right? There's been a lot in the news about, tariff rates and, tariffs that may go into effect on August 1st. So, those could have an impact and complicate the data.
Yes, sir. All right, SALT deduction for 2025. The state and local tax deduction, known as the SALT deduction, provides a federal income tax deduction for state and local income taxes and property taxes as an itemized deduction reported on Schedule A of the tax return. Uh, Prior to 2017, what was going on concerning the SALT deduction and what is looking to change?
Yeah, prior to 2017, the state and local tax deduction was unlimited. So it really allowed larger deductions for those who reside in high income tax states or states with really high property taxes, right? Now, it didn't mean you got the full credit if your income was really high. Your itemized deductions were phased out. So you would see the total of those deductions reduced depending on your income level. But for most people, they were able to get the full benefit. Then with the Tax Act in 2017, not only did it double the standard deduction, so now more people are more likely to take the standard deduction rather than itemize, but it capped the SALT deduction at $10,000. So, people that in higher tax states with high property taxes, high state income taxes, really wasn't benefiting them. In many cases, unless they had a lot of mortgage interest or a lot of charitable contributions, they were probably going to be taking the standard deduction. But the change that we've seen with the so-called One Big Beautiful Bill that was recently signed into law, not only did it extend a lot of the tax provisions from the 2017 Tax Act, it made some adjustments, which we've talked about kind of no tax on tips. Of course, that has certain provisions, the no tax on Social Security, but didn't quite end up being that. We'll probably talk about that more in the future. But it did expand the amount of state and local taxes that can be taken as a deduction from 10,000 to 40,000. Of course, that's also subject to some income phase out. So, as your income gets over a certain level, you may not be able to take as big of a deduction. But for a lot of people, that could have an impact, right? It could change it where they're not going to be taking the standard deduction anymore. It would actually be worth it for them to gather all of those itemized deductions and see if they get a benefit. Of course, a lot of people continue to itemize on their state returns anyway, so maybe they've already been doing that. But it is something for people to look at, especially those that are in a high income tax state, like we're here in California, or a state that has high income taxes, and they also pay quite a bit in property taxes.
Is there a point in which they'll make it clear what the income like phase out, what that income level is?
Yeah, most of the phase outs that we've seen have been started somewhere around 75,000 for individuals and 150,000 for married filing joint. At least the part where you start to lose some of the potential benefit, and then with it, fully phasing out at around 100,000 for an individual and 175,000 for married filing joint. That seems to be kind of the threshold that was used in a lot of these provisions.
And what other ways with this change coming, those that may be most affected, can they form any sort of strategy just to make sure they're not on the back foot come tax season?
Yeah, I mean, there may be some tax planning options that we used to use in the past that really weren't effective, but may become effective again, right? So, one example is, let's say someone is close. Their itemized deductions are right about the same as the standard deduction, right? So maybe one year they take the standard, maybe one year they get a couple $100 more by itemizing, but it doesn't make a big difference. In the past, what we would do is we would time out when they made property tax payments, right? In a lot of states, it's due 2 times a year, right? Here in California, we have due at the roughly end of November and beginning of April, right? Well, if you just go through and pay each one as it comes due, you're going to have 2 property tax payments, or roughly half the amount that you could deduct in that tax year. But you can pay kind of your second installment in April, and then pay your next year's in full before the end of the tax year. So now you've pulled 3 property tax payments into one year. Gives you a larger deduction that you may be able to take advantage of now that the state and local tax limit isn't capped, or the cap is higher. Of course, then that means the next year you're only going to have one payment, right? You'd only make the one payment due in December, and then make the next one in April, and then double up again for the following year. So it's kind of an every other year tax strategy, so that one year you're taking the standard deduction and your itemized deductions are much lower than the standard deduction. The next year you're itemizing, and maybe your itemized deductions are several $1,000s over the standard deduction, so you're seeing a greater benefit. So there's a lot of just little tricks like that you're allowed to do. It's perfectly legal. That if you plan it out, where you can save yourself, several $100s or possibly even more, depending on the amount of your property taxes in taxes.
Is that a situation where the individual would probably want to monitor quarterly where they're at? Maybe if they, some people, let's say you're in sales, you might have you might have a base salary, and then you don't know, your income might be greater one quarter, less the next quarter, especially compared year to year.
Yeah, it can really depend. Some people have pretty consistent income, especially if you're retired and maybe collecting a pension and Social Security and maybe a little bit of investment income, right? And it can make it a lot easier to kind of, put it on this strategy and just know, okay, this is the year I do this, then this year I do something different, and then next year I'll go back to the strategy. But yeah, people whose income or even their deductions may be volatile based on different factors. In that case, it's generally tax planning, right? Usually late in the year, you want to do tax planning, say, should I pay all of my property taxes or should I pay just the first half that's due and push the other half off to next year? What may be the best strategy in terms of tax savings?
All right. Thank you for the clarification. Well, let's jump on over to the Plan Solutions Incorporated Bulletin Board. It's that time of year again, a fun time where the Plan Solutions family gets the golf clubs out.
That's right. Yeah. Friday, October 10th, we're doing a 1 p.m. Shotgun start at Rancho Maria Country Club. We'll be back on the North Course again this year. We've kind of gone, to north or south, but the North Course is the premier course out there. And we're going to do it a little bit differently too. We're starting a little bit later. We're going to do a boxed lunch included. So, people can grab lunch as they head out and not hold things up. And then, rather than doing kind of a sit down dinner that's dragged out a little bit, I know, especially when we finish, some people are worried about traffic, may have a little ways to go. So we're more going to do kind of a reception with heavy hors d'oeuvres, something a little more informal as we wrap up the silent auction raffle, things like that. So, yeah, hopefully we can get a large field again this year and raise a lot of money for a variety of different cancer charities.
Absolutely. All right, Mr. Armour, anything else you want to add before we wrap up this edition of the Plan Solutions Incorporated podcast?
Well, we talked about a lot of things here, from the IRS Dirty Dozen to, still touching on some of the tax law changes from the most recent tax and budget bills. So obviously, if people have a question about how this impacts their individual situation, by all means, give us a call and, let's talk it through and see if there are some provisions that will benefit or, maybe they're just going to kind of see more of the same as the lower tax rates have been extended. So they'll get some of that benefit from not seeing their taxes go up. But in some cases, there may be some opportunity to do some tax planning and get some benefit from some of these additional provisions.
Absolutely. And if you haven't contacted Plan Solutions before, all the contact information, including website and phone number, as well as email, are in the podcast description. And if you have yet to subscribe to the Personal Financial Review, the written content that we discuss here on the podcast, send Katie an email. It's katie@plansolutions.com and get subscribed today.
The views and opinions expressed in this podcast should not be construed as an offer to buy or sell any securities. The information may not be current, and Plan Solutions has no obligation to provide an updates or changes. Plan Solutions does not make any representation or warranty as to the accuracy or completeness of the statements or any information contained in this podcast or any liability therefore, including in respect of direct, indirect, or consequential loss or damage, is expressly disclaimed. Plan Solutions is not providing any financial, economic, legal, accounting, or tax advice in this podcast. In addition, the receipt of this podcast by any listener is not to be taken as constituting the giving of investment advice by any Plan Solutions associate or individual to that listener, nor to constitute such person a client of Plan Solutions. Any reference to a specific company or security does not constitute a recommendation to buy, sell, hold, or directly invest in the company or its securities. Market indexes are unmanaged and cannot be invested in directly. All price references and market forecasts correspond to the date of this podcast.
Plan Solutions is a registered investment advisory firm.